Okay, thank you. Well, welcome to the SFA Vegas, the future of fintech. In terms of our time, we wanted to really focus on a few areas. One was on the securitization solutions on the new issue side, and then also on secondary. Obviously, because this is there's a lot to talk about in fintech, but we wanted to focus on new issue and secondary technology and opportunities around fintech. And then if we have time, we'll talk more on other applications around analysis of securitization and ESG. But I think a lot of people have talked about ESG this last couple of days, so we'll leave that for the end if we have time. I just wanted to get a chance to let everyone introduce themselves real quick. My name's Paul Mangione, and I am the principal of Fort Schuyler Advisors. We focus on working with fintech companies, especially originators, around raising funding and warehousing and whole loan opportunities. We also work with investment funds and help them originate new types of trades and new origination areas of origination, different asset types. And I'll let each of our three panelists introduce themselves and their firms and what they do around fintech.
Hey, this is John Wooten from Block Transfer. We're a securities transfer agent built on blockchain. We empower asset holders to transfer their stocks, bonds, and securities in 5 seconds, not 5 days.
That's quick. It's very quick. Hi, my name is James Vogl. I'm the head of product at KopenTech. KopenTech is a fintech platform that operates trading and analytics platforms for structured products, most specifically CLOs.
Excuse me, my name is Jay Profitt. I'm with Securitize Markets. I'm the chief operating officer there. We're a broker-dealer that offers a platform for companies to raise capital, as well as we can securitize assets, produce funds, but it's really a platform for both the issuer and the investor to come and find opportunities in alternative assets.
Great. So I think we'll start off the conversation really talking about kind of the new issue market and how some of your companies help the process of origination and distribution through new technologies. There's a lot of different ways. People have been doing private issuances and securitizations for a long time. They've been doing it the same way for a long time as well. And now we have some different technologies that do a couple of things. They make the process maybe more efficient. They maybe help cut down on the fixed costs associated with those that origination process or the securitization process, but they also, there's also lots of legal and regulatory issues that still need to be covered, depending on what type of securitization or issuance you're doing. So I'll start off with Jay, just kind of giving a sense of what Securitize does in, the generally around kind of new issue across asset types, and then what specifically around securitization that you guys can help, help clients, provide their process.
Okay. Sure. So, as I said, we're a broker-dealer that helps firms raise capital, but we also offer different types of asset classes on our platform. So. We're pretty much agnostic to whatever asset type there is. So it could be a structured finance product, it could be a Reg D fund, it could be a Reg A capital raise for a company. But what we do there is help those clients through that process. So when you think of, kind of from my perspective, where I'm coming from for this future of fintech, what I'd like to kind of talk about on the primary side is really how investors, I believe, will hold assets in the future. It's more of like a possession and control approach. I'll give it a little bit of an analogy around, so back in the day when you're as old as I am, you had cassette tapes, right? And you would, I remember on Saturday mornings, record Casey Kasem's top 10, right? Got to hit the record just right. And if you fast forward to, a few years later, we had CDs where they digitized music, right? But they put it on this hard disk. Fast forward even further, now we have that digital and it streams over the internet, right? So you have Spotify, Apple Music, whatever. So think of, we started out with stock certificates, right? And then we went to traditional book entry, and then now I think we're going to move to tokenization, right? You're going to own those shares or tokens, whatever it may be. It's the digital representation of ownership. And I think that's really around where we're seeing in the future is it's not with your broker, so you don't log into your Fidelity account and pull it up. You just have your personal wallet. You look in your personal wallet and you'd see you own so many tokens, and those tokens can represent any asset. It could be a securitized product. It could be a multifamily entity where you own 2.56% of it, and you represent it. It could be a fund. It could be common stock. But I think when I was thinking about this panel, it's from our perspective, kind of the future is really around how you own an asset, and it's going to be through a token, which is on the blockchain. So,
okay, and I mean, I think that's one point. I'll let everyone else kind of comment as well. But in terms of like a tokenized asset and a wallet, like you're talking about self-custody versus, I think people when they think of, let's say they have a Schwab account, you look at your Schwab account, it says you have shares of different equities, but in reality, what you have is you have an IOU from broker dealer saying they will give you those shares, or you own they will give you possession of those shares. So that's the reality of it. There are not many people still have the assets are in the street name. That's the nomenclature, and it's not as if people have the physical certificates anymore, and that's not done. But when you look at what's the benefits of self-custody versus the traditional model that we're talking about here, that we talked about, that I just mentioned.
Well, I think, and Josh can probably help on this as well, I think it's around movements of assets. So I don't know how many of you have ever tried to switch your brokerage account from Fidelity to TD or whoever, but it's a very paper process. It takes multiple days. Sometimes the assets you try to transfer, they're like, we won't accept those. We don't accept that type of asset because it's a private share. It's a private REIT. So I see more probably around the administration of it makes it much smoother and easier because at the end of the day, it's just it's in your wallet. There's no going through a broker anymore to say, hey, can you move that? If you wanted to move it to your broker, you hit a button, and as Josh will say, seconds to minutes, it's going to be in their wallet, right? Not sending through the paper, faxing the paper, whatever process there is in place today. So that's I think, again, it's an advantage. But there's a lot of regulatory things to work out. There's some SEC and FINRA items around estates and when you lose your password. So there's definitely some regulatory framework that needs to be put in place to kind of help with this.
And Paul, you mentioned direct representation there, and you do say I'd say most people hold those shares in a brokerage account. It's held, and the whole centralized, everyone's just part of the whole system. But a lot of times that breaks down, and as you put self-ownership in place, a lot of times that's not even possible because the amount of shares in the system circulating fundamentally don't align with the actual shares on the corporate books. Since the corporate books, they, one way or another, kind of get reported to the SEC, whereas with a lot of these intermediaries doing the trading and doing the transactions in the middle, if you look, for instance, at Overstock.com around the 2007 era, when 160% of the outstanding shares were voted at an annual meeting. That happens exclusively because there's an overstatement of the number of shareholders in that central clearing due to naked short selling, and perhaps more timely with the recent GameStop fiasco, same thing. You have these naked short sold assets where you sell shares that just don't exist, and the brokers still collect that money and say you have that IOU. With GameStop, 30% of the trading shares didn't exist, and that's why you have a lot of this volatility in assets that are held in these street name representations that aren't entirely accurate of the underlying corporate books and outstanding shares. So you can kind of get away with some fluff that you can't get away with right on the issuer book level.
You have anything to add?
Not necessarily on that topic, but one thing that we think about a little bit is, within the CLO space, that is in particular, the CLO market can get some flack on occasion due to a few issues, and one of those is that a lot of the processes whether those are manual processes or just, securitization. Some things within the CLO market are absolutely antiquated. I mean, painfully so. And I think about, for example, documentation is one that comes up a lot, right? That you have law firms prefer their own language, key terms. The trustee might have their own. The CLO manager might have their own too. So you're dealing with a lot of competing things. And I think one thing that's really powerful about blockchain as a technology, generally speaking, is that it can be used as a risk management tool and a standardization tool. And that's where I think when we look at the CLO market and where exactly it's going to go in the next 10 or 15 years, I think it's going to have to go towards standardization. And blockchain, while we have some regulatory hurdles to get over, undoubtedly has a lot of promise and potential in that market. And that's something that I think we as technology evangelists within that market really want to see. So I think there's tremendous potential in the CLO market and across structured credit.
Great. And I'll go back to Jay. You had talked about tokenization. Maybe you can give a little more on that in terms of what are the benefits? You mentioned some of the benefits, but also what are some of the maybe the issues or that are against it, or and what are benefits from a cost standpoint? What are disadvantages around tokenization, and what does that mean when you're saying you're tokenizing? Because a lot of times you can tokenize a virtual asset pretty easily because it's just if it's on some kind of blockchain, you can kind of control the ownership, versus tokenizing a real world asset is a little bit different because it's how do you control that custody? I mean, there still needs to be an interface to going from real world to tokenization in traditional assets that go into securitizations.
Right.
So we can give a little on that.
Sure. So we were talking about this in the room earlier, that I think that there's still a cost component for writing to the blockchain. And there's been some really great stories I don't know if you've seen, but when you transact on chain, there's gas fees. It's essentially transaction fees. And of late, Ethereum has had some, whopper gas fees because the network is so congested. So there is a cost associated with blockchain. However, there are multiple types of blockchains that are out there. So our firm, my sister company, Securitize, which is a transfer agent, so we support Ethereum, Avalanche, and Algorand. So we support multiple protocols. Reasoning behind that is sometimes cost, sometimes features and capabilities. But I also want to demystify when you say token. So if you just think about, it's essentially just a digital, like a code on the blockchain that represents your ownership, and it's publicly available. Not the non-public information, but just the wallet address and the number of tokens that you hold in that wallet. So there's no privacy risks. I think some of the barriers to adoption of tokenization is really around education. I was at a conference in Texas, and one of the gentlemen was speaking on a panel, said he's a consultant, and he had like 30 different FINRA folks on the phone, and they were walking through blockchain technology and tokenization, and it 90 minutes in, he goes, "Are there any questions?" And somebody raises their hand and goes, "So are we talking about cryptocurrencies and Bitcoin?" And so that's the challenge we're up against. It's a constant education process. I'll even say for myself, I'm from centralized finance and I'm moving into DeFi now, and I'm learning. I spent 20 years on the other side, and now I'm on this side. So, and then the other thing is the trust factor. I think a lot of people, Paul had said in the rumor in talking about there's a Chrome extension, you click it and you're going to have all your assets there, and that's I think uncomfortable for people because you feel like you're using this Chrome plugin and you're just. But that's blockchain technology. It's very open, it's very transparent, and it's meant to act in that capacity. You don't have to have a two-factor authentication and you log into your brokerage and all the other things. It's just sitting in your digital wallet. So hopefully that answered some of that.
Great. Yeah. I mean, I think that's. And how about in terms of getting a real-world asset into? I mean, there is a process through you create an SPV, you put your assets in an SPV, and then. That SPV can, there's got to be some kind of process where you go from the SPV to an actual token. And that's something that Securitize is involved in, and everyone on the panel, if they want to talk about that. Because there is still some kind of form of centralization or some kind of trusted partner that you need to use in real-world assets versus, which is maybe a little bit against the tradition, the full kind of like DeFi person, it doesn't fit in their kind of mentality or their process, because there's like, you want to have no trusted partners. But there is a place that, like, there is a mortgage note or a car loan note or a UCC filing. There's something that's actually physical that you still have to provide for real world assets. And these are assets that were not originated on chain. There's, I think, a different process that maybe we'll have some time to talk about on chain originations. But we're still kind of dealing with how most originators deal with the process now. But
I was going
to talk about that a little bit.
I was going to say that we followed it. So in September of 2020, the SEC came out and gave a no action letter and guidance around processing digital assets. And when I talk about digital assets, I'm talking about securities. I'm not talking about cryptocurrencies, but true securities that meet the Howey test. And what's interesting is while we process on blockchain, the SEC requires us to hold everything in traditional book entry at the same time. So they call that the golden source. So they have said to at least our transfer agent, that's great. It's a benefit. They can move the tokens around. But at the end of the day, the SEC is like, then this is that I talked about the kind of migration of legislation is getting comfortable with decentralized, because what if, like an estate plan, somebody passes away, how do you know how to, get those assets to the right heirs and that whole process. And so, yeah, that's a little bit about that.
Right. That's really interesting, Jay, because a lot of times when you touch into this idea of tokenization, you're thinking about taking maybe a more traditional asset, and we've seen some other companies up here over the past couple of days that have been representing them with digital currencies or et cetera on the blockchain. One thing that marks a really big, because the whole challenge with that is you have that central intermediary, that central accountant. You have that Arthur Anderson that you're trusting for all the correct documents. And let me see. And so, as Paul kind of referenced, the whole idea of having these digital assets, really the core principle and the big value add for the shareholders, the investors, et cetera, is that you have no intermediary who owns all the rules, who has the rule book for the ledger, and instead it's just person to person, right? You don't go through some middleman who executes all the paperwork, all the transfers, but instead you can just use the open, everyone knows the protocol, the open blockchain network, to transfer right to that other party without going through that middleman. And so, at least at Block Transfer, we've received about a month ago final approval from the SEC to have book entry, unrestricted shares traded directly on the blockchain, such as the assets in these digital wallets, which are associated to identities, are the actual shares of a company's book entry stock. And those transfers on the blockchain are material fact and reported to the SEC's material fact in the book entry form of that issue. So the big shift, the big mindset shift is maybe not so much figuring out how do we get these centralized things tokenized on the blockchain, but rather how do we make the blockchain the thing? And that opens up just an enormous amount of avenues for individuals across the world who traditionally maybe don't have access to financial infrastructure. Maybe they can't go to a bank. There's no bank near them. They're unbanked. They can't get the 7 documents they need signed off for their stock transfer to get stamped and mailed in. And instead, if you do all that on the blockchain, you remove all these, as we mentioned, archaic processes, you really open up a very large investment opportunities to individuals who just traditionally are disenfranchised from those markets because of those centralized middlemen.
Got it. And Securitize is a regulated entity, so they still have to go through the traditional KYC, AML for counterparties.
Yes. So and we actually created a product called Securitize ID, and we actually think this is, it's just going to be a thing. So it's how do you pooled of KYC'd individuals is going to be very valuable in the future, right? Because if you have blockchain, right, and you've got this decentralized kind of finance, the one hurdle you have is making sure that you don't have nefarious actors, participating in this space. So at Securitize, we've created a product called Securitize ID. We do a full check on who you are, what state. We do a liveness check to make sure you're actually a real person. So there's a whole process associated with making sure we have them. But yeah, so Securitize, we're the transfer agent's regulated by the SEC. Our broker dealers, both SEC and FINRA. We offer primary, but we also offer secondary services as well. So people that raise that capital can list it on our ATS and provide that liquidity and access to their investors.
Great. Okay. And I think I think that's a lot on the new issue side. I think we could talk a little bit about on the secondary side, and we'll give James a chance to speak a little more on what his firm does around the CLO business, because I've spent some time on the securitization side. I haven't been that active in the CLO business, but he describes a lot of challenges that are already in existing process, very manual processes that exist in other areas of securitization, and there's specifically how, let's say, almost like a refinancing business that happens in CLOs. And I'll give James a second to
sure. And let's see if
on there.
you guys, do we have a presentation available? It's going to only take like an hour and a half, everybody. So don't worry. That was a joke, guys. Come on.
There's some slides back there.
Let me maybe if you can just make sure. Oh,
Yep. Keep going.
Keep going. So just backing up a little bit for folks who don't work specifically in the CLO market. So KopenTech, as I mentioned, is this analytics and trading platform for CLOs. And similar to Securitize, we actually have a subsidiary broker-dealer that also has an ATS license from the SEC. So we're government regulated to be able to host auctions, both applicable margin reset, which I'll talk about in just a second, as well as just daily trading of CLOs on our platform. So when we look at the business and how we approach the CLO market, the first product and platform that we came out with was this idea that there are a lot of these archaic processes in the CLO market. Most notably, the one that we picked off first is CLO refinancings. Now, for those who are unfamiliar with the CLO or how it's structured, I'm not going to get into it too much. But what I will say is that once a CLO is issued, it's issued typically with a 2-year non-call. After that non-call period, it can then be refinanced typically by an arranging bank. So you call up an investment banker, usually just one of them, and you say, hey, look, we're ready to refi this deal. We're going to lower the rates. We might play with the documents a little bit, but we have to gather all the investors back and get these securities. We're actually destroying the CUSIPs and then reissuing them, right? This ends up being a really cumbersome process. It takes anywhere from 60 days to 90 days. And because you're dealing with one arranging bank conducting this transaction, it basically is like a mini new issue. So let's see if this is working now. Maybe, maybe not. I can go without it, but I don't know what to press on here.
Yep. Can you advance
this real quick, Paul?
Yep.
Thanks. I just want to make sure I keep going. So when KopenTech came around and was founded back in 2017, a number of deals within the CLO market had this new feature that was called applicable margin reset. And the notion here is that similarly, we had a no action letter from the SEC where we said, look, if we're doing a CLO refinancing, all we want to do is reduce the rate on the CLOs. The point here is maintaining the CLO arbitrage in order for equity holders to increase the cash flows that they get. And the question that was asked at the time is, why on earth do we need the CUSIPs to be destroyed? Why do we need an arranging bank to go out here and do all of these different processes? What if instead we had an online platform where we invite any broker-dealer to participate, submit bids for their own book or for client accounts, and refinance a CLO online? Again, the regulators said, okay, this seems pretty good. We went to work. We built the platform. A number of CLOs had that language built into the docs. And then in January of 2020, we started marketing this to investors. We said, look, we're going to have the very first applicable margin reset online multi-dealer refinancing. Come and show up. And so, of course, as with any innovation, particularly in a market that is a little stuck in its old ways, there was a lot of skepticism. And, ourselves, we were like, we really hope everybody shows up because we've been planning this for a long time. We hope you come and refinance this $350 million CLO. And as it turns out, the market came out in droves. We received over $1 billion in bids for that first auction. So it was 3 times oversubscribed. We had a number of different broker-dealers participating. Interestingly enough, we thought we would have a lot of folks either at the, the top of the capital stack at the AAA level or down at the BB level. We had them across the board. In fact, some of the tranches were up to 6 or 7 times oversubscribed. That to us was a huge proof of concept. We saw a number of additional AMR deals get printed in the following years. Of course, those have that 2-year non-call. But what this showed us, I think, was this major proof of concept, which was a couple of things. The first of which is there are really inefficient processes. As sophisticated as investment bankers are, they can't bring multiple banks to an online refinancing. Only an online platform can actually do that. And so what we saw when those bankers came and participated, it moved it from a primary transaction, right? So it used to be done by the arranging bankers, to a secondary transaction where you're opening up, and I think you both alluded to it, but you didn't say the word necessarily, financial inclusion, or getting as many people to the table as you possibly can. Now, the really cool thing about that is, again, the process has taken off. We've now hosted 5 of these online auctions just since we had that very first one in January of 2020. Again, those oversubscription numbers are really high, so we're really happy about that. But the other piece of this is that we're unlocking a ton of data that just wasn't available before. If you have a single arranging bank going out there and conducting a refi, that manager might get some interesting information about how their deal is perceived by the market. They might be introduced to new investors. But when we have 15 banks on our platform submitting levels in a single auction during a 2-hour window, that's a really powerful thing. And we're doing this for roughly 1/4 of the cost of a traditional refinance, and we're not destroying those CUSIPs. So it's not a mini new issue, right? So all of these elements sort of led us to say, well, if we can replace some of these really old processes in the primary market or in the secondary market, or use automation, any kind of technology to improve it, it's going to make the market better for everybody. And we're not just going to have bankers calling up the big AAA guy in New York or New Jersey. The small insurance company out of Kansas is still going to get that call too. They're going to be able to participate. So I think that the technology itself is about bringing more parties to the table and allowing the market to grow that much more and modernizing it. So that's the way we look at refinancings in particular.
Do you have a second set of slides on there? They didn't provide it? Okay, we provided to them. All right. Well, we'll...
I can draw.
Yeah.
Can you draw a picture? Just kidding.
Well, we'll give we can talk a little more about just like the CLO process and what other benefits, you guys provide there. But in terms of just, I guess, what additional information comes out in terms of either matching or settlement?
Yeah, this is really cool. So, I get excited about this. This is where my fellow CFA charter holders will nerd out. When we conduct these auctions, it's a reverse Dutch auction. So we're trying to go from the lowest margin rate up, right? So every tranche is going to have its own mini auction essentially. So if you have AAA through BB, you're going to have an ability to bid on all of these different ones. And the really cool thing about that is in this traditional refinancing methodology, the one through an arranging bank, the arranger basically sort of tells you this is where we think it should be priced, this is what investors are going to buy, this is where your manager tier is, all those kind of things. And then once the deal gets refinanced or when a deal gets priced, that information is out there in the market and you know that. When we host an AMR auction, the manager actually receives a full demand curve at each tranche level of what was bid, what amount, not necessarily by whom, but they basically get to see the demand curve that the market has across every tranche. That's really valuable data if you're a CLO manager in a really competitive environment, and you say, oh, well, look at the demand for my BBs. This was 7 times oversubscribed. That's a really big deal. And so this is data that wasn't available in the past just because nobody could possibly have it. When you have a single arranger doing it, you're not going to get that data. But when you have all of these bids coming through from around the entire marketplace, you're going to be able to see a lot more. So again, I think that the example of refinancing is a good one because we found other areas. I'll get into trading in a little bit, just daily trading of CLOs. But the amazing thing is it opens up a whole new window of information that we didn't have before and that the managers and broker-dealers that are participating really like. So we're happy about that. We're going to keep on expanding from there.
Great. And I think we could talk about trading a little bit, but the benefit of some things we talked about, either tokenization and using blockchain technology, what does that do in terms of the settlement process? I think John covered it a little bit, talking about some of the issues that we saw in some equity offerings or secondary or I guess it was voting shares, and you can kind of see, well, what does tokenization do for you from a closing, a settlement standpoint? Like, I think a lot of people are familiar with settling, treasuries, or they're settling, ABS bonds. There's a process, and usually it goes through a company called DTC, which most of the broker dealers own pieces of, and it's a process where, and I think you kind of go back to where the origins of all these businesses were, and I always think of the origins of DTC was a netting process where companies netted to each other, multiple transactions. I sold you 5, you sold me 3, so we net 2 to you, and so you don't have to send all these physical certificates all over the place. But then you kind of get back to, okay, well, that was why they did this. They had this netting, but now you have all your assets are digitized, even though if they're not tokenized, they're in some digital format. Why can't you have a direct settlement for each asset, and you can settle in real time? I've settled trades, let's say T+0 or T+1, physical or traditional assets, but you have to prearrange, talk to all the providers, talk to your operations department to make sure you're going to wire the money, and the counterparty is able to do that. So you can do that on a by pre-approval process. But with tokenized assets, you have the ability to close in real time or nearly real time. So let's see, maybe you guys can elaborate a little bit on how that happens and what the benefits are for all the parties involved.
Perhaps kind of the biggest challenge with that central clearing, everything netting out at DTC, is just very simply the basic accounting of how those accounts fundamentally settle, because everything is all extremely opaque. You can't just go and look at DTC's numbers. And there are a lot of lawsuits of some pretty serious cases of fraud where everyone was like, hey, we want to see, because of brokers realized in the late 90s they could sell shares that they didn't have and just generate money out of thin air. And so there are a lot of lawsuits that stem from that. And everyone wanted to get what the information from the DTC of where are all these shares coming from, who has what. And the challenge is that it's just very opaque. So all these centralized books held by these central middlemen, and DTC is one of many, there's just a lot of people in the whole process of settling stocks. You mentioned other kind of bond markets are closer to the transfer agent level, which makes it a lot easier to settle. But for instance, the last certificate pull, which just means the company forced all the shareholders to get book entry certificates before it was banned because it messed up all this centralized opaqueness, and it was with a company called CMKM Diamonds. And the big picture story from that is they didn't have enough. So the DTC had, say, 700 million shares authorized on the books of the company, but there were billions of shareholder claimants on those shares because of the way that they process the trades. They make it short sold, and at the end of the day, when they were forced to reconcile that, they simply couldn't, and a lot of shareholders ended up without certificates of the securities that they thought they bought, because those books are all opaque and they can break the rules and no one's here stopping them as we sit here talking about it. So with blockchain, it's just this idea of decentralizing those ledgers, making them transparently accessible to everyone, and very clearly stating who has which assets at any given time live. And with the transfers and the trades, just executing that all out in the open so that people can very clearly see this person, Alice is transferring these shares to Bob, and there is no confusion. There are no $100 million lawsuits about who has the shares of the company because some central opaque ledger doesn't reflect the actual shares allocated to the company.
And I can add around the settlement side. So we're very excited. We just launched our ATS on the 28th, and I'm able to report that I've actually seen T0 trades with equity securities, which is really cool. And it's just because it's how digital assets are traded. As I referenced the 3-step process, what's really interesting is the broker I'm at, we were just an ATS, so Our transfer agent is Securitize Inc. is the custodian of the tokens in the traditional book entry. And then we have Prime Trust, who's the trustee that holds the cash. And our ATS literally just introduces buyers and sellers together. And it's done same day. Like as soon as the trade is completed, the tokens are moved by the custodian, which is Securitize Inc., and then Prime Trust moves the cash in between the accounts. All this is done in real time. It's trade for trade. Again, I think this disruptive technology is going to concern the people like DTC and others, where they just have business models associated with shorting and there's a lot of things they have to unwind to actually use this, because this is really like cash trading, right? Like this is Jay buys from Paul and Paul sells to John. That's how it works. There's no margin, right, associated with these trades. But yeah, it definitely speeds up the settlement process, makes it very easy, very simple, because it's really just movements across accounts within an institution. So,
Yeah, when you don't put an order in and it goes to a black box with an average of 8 or 11 intermediaries in the trade, and instead you just put, for instance, with our assets, they trade on a decentralized order book. You can post an offer, trade with anybody. You immediately get filled on the decentralized order book, and you can immediately see who was on the other side of the trade. It just short lines the whole process. And when you get rid of the 8 intermediaries that process everything, it's like you have no idea what's going on, and you just make the transfer just like that. Like settlement effectively becomes a non-item. It almost is removed from the equation, because there's no longer this 3-day settlement, T0, whatever you want to call it. It's just transferring right with each other through just very simple. You can just set up the blockchain trade protocol and say, this is the protocol. You execute the trade. For our issues, it takes 5 seconds to do a stock trade with any arbitrary party. It's a different game.
In terms of these, you spoke about equities, but obviously I think a lot of people here are focused on asset-backed securities and securitized bonds in general. Like, I guess, what is the difference how can you apply the same idea to securitized bonds or securitized product? Does it match one for one? Are there some of the issues that go around, like different asset types or different it's basically like a different industry. Each securitization is its own trust. It issues bonds from that trust. There's a number of bonds from each trust. Like the liquidity of those specific bonds vary, because there's not each deal may have a few million bonds in each for each CUSIP, versus how many outstanding shares of Apple there are. Like liquidity changes a little bit. Obviously there's lots of like comparisons of CUSIPs that match each that are very similar to each other in for lots of different criteria. But how can that technology that you just described, Jay, kind of fit maybe some of the securitization opportunities that we look at?
Sure. So I definitely think it fits across all asset types. I'm not as familiar with like CLOs and some of the structured finance, but within our industry, like we have some folks in the industry that they sell farms, and so they fractionalize that, and then it's the same process. It's a token, and I can sell it to you. You can buy it from me. There's collectibles, so there's artwork, right? It's tokenized. It's settled the exact same way. It's just a T0. Like I think Josh is saying, it just kind of, the settlement becomes, it's not an issue anymore because of how the transaction is completed. It's literally person to person. I mean, so you remove the middleman completely. There are institutions involved to instruct cash movements and things, because you have KYC, we have to follow regulations. But at the end of the day, I use this sometimes, but it's a lot like going to eBay, and I'm buying from seller B and selling, and eBay charges a little fee, and that's all it is, and somebody ships me the item. So, but it gets, I think, more complex. That's very simplistic, but it gets more complex than that when you talk about billions of dollars, and you want to talk about when you have something locked in, is it settle? You have to. I think also. That's why I think there's legislation that needs to kind of help with this process, just to make sure that those transfers do occur as prescribed.
So, and how do you close a trade like on Saturday afternoon? You know, I'm watching the Army football game, and I'm interested in buying a certain issue of a auto securitization. How do I close that in that time frame?
For us, it would be so we are moving right now, we're just regular market hours, but it will be 24/7 trading. So but it's really about the one area where we're focused on, which I think will be the challenge is, and you kind of touched on it, was liquidity. That's the key component, right? It's how many players are in that market space that are looking to sell or buy that one asset type that you're describing. Mm-hmm. And that's the challenge. For us, that is the challenge, is getting the supply side, which is all the issuers, and then the demand side, which is all the investors, and bringing them together. Because right now it's kind of pockets.
I guess my question was more like, do I need to have a funded account that flows with you versus like, how do I do real-time settlement when you're expecting to receive payment and I'm expecting to receive the security, but we're not during banking hours? Like, how does that work?
Right. So all of our technology and APIs are 24/7. So you do have to have an account. So you have to open an account with us. You have to go through KYC. Right? You have to know that you're a verified individual, as we call it. We can look at suitability, kind of the whole process. And then once you have that account open, though, then you can place your orders on our ATS, the secondary market, and buy and sell. And so that's really that's the process.
But you need to have a funded account,
yes.
or you can fund it in real time, fund it, and then you can close. So before the trade can actually happen.
Fiat, USDC, so you can fund it in literally minutes. It says USDC is really quick and easy. So yeah, you could do that over the weekend.
Blockchain doesn't sleep.
Yeah.
Well, what I'm saying is you need a cryptocurrency versus you said USDC versus like I have to get my USD into USDC. So there is depending on who you're working with.
Yes.
You basically get floated alone, or you need to just have it. You have to have your assets already in the account before you can do the trade. Versus, I think that's one of the things you got to talk about is that, and that's the big reason, the use of cryptocurrencies is actually you can have 24/7 trading because you can settle a trade in real time. That's the only way you can do it, is you have to have a funded account to do that. Okay.
And yeah, that's where I think we'll get stable coins is a whole nother topic. But
yeah.
What we're also seeing is that's one of the biggest challenges. You talked about international, like we're a global company. We're in Japan and Israel and Spain and Argentina, and just getting cash movements into the U.S. Is extremely difficult. It can take up to 3 business days. There's lots of rejects. And this is why I'm a big advocate for whatever stablecoin they actually land on. If it's the Fed that creates one, great. I don't care who. But when we have clients who are able to fund in different countries in minutes through USDC, it's a game changer.
There are a lot of nuanced ways to implement credit for those accounts and for those asset purchases. It could get kind of deep.
Right. And I was also thinking about, I guess there's 2 points that I think about. One is with securitized products, is there any financing opportunities that you can get leverage through a tokenized asset? And then second is like a traditional fund, like we'll have an administrator. So the administrator really is on top of the fund that really works for the investors of that fund to make sure everything that goes in and out of that fund is accounted for. Cash goes out for security or it goes out to pay some expenses. It's all kind of accounted for. The administrator is really kind of doing that. In my experience, that's what they focus on. So maybe if anyone has any thoughts about leverage using it, with the tokenized assets in a real-time settlement, like how does leverage play into there? And then also, talking about an administrator, like how does an administrator factor into using, let's say, a wallet for your closing process versus on blockchain versus the traditional methods?
I can't comment on the leverage piece. Not as if you guys have.
We're developing crypto asset, blockchain asset, collateralized leverage financial products right now. It's kind of on the tailbone. We're more so focused on bringing new issuers onto our platform to act as their transfer agent. We've done some research onto it in the past couple months. and we haven't finalized anything yet. There are a lot of really interesting ways you can do it with blockchain-based collateral. When you have different venues, so not just equities, but you also have, say, all of the portfolio items you would have on the same general decentralized blockchain, you can do some pretty interesting lockups with some cryptographic proofs. But that is probably a little more ways out than where we are right now today, just bringing these securities more so into the digital asset space.
All right, great. I'll give James, if you want to comment any just in general, just on the secondary side.
You guys just got to give me a reading list for all things blockchain. If I'm called to this panel next year, it's going to be bad. No, you actually had a really good comment earlier, Jay, when you were talking about matching buyers and sellers and sort of finding this intermediary. The interesting thing, and this is where I'll take to the CLO market, because again, that antiquated notion about how so many things are done within this market is very interesting to me. So just a couple of statistics. Many people know that this year the CLO market hit $1 trillion in outstanding. So it's a big number. Even I think 5 or 6 years ago it was around 200 billion outstanding. So it's grown substantially. If you look at other somewhat similar asset structures, let's use high-yield bonds, for example. High-yield bond market, the corporate high-yield bond market in the U.S. is roughly 1.5 trillion. The turnover, right, so what percent of those bonds outstanding have been traded in a given year is, I think the number is 2.3x, right? So 1.5, you do the math, right? They turn over a fairly decent amount, right? With CLOs, it's less than 1/10 of that. Only about I think the number last year was $185 billion traded in a given year. Now, why is that, right? They're decently similar enough. Sure, CLOs are heterogeneous investment vehicles. They might have more nuance to them, but why on earth would the difference be like that drastic? Well, when you look at CLOs, the typical way, if I'm an investor and I'm holding CLOs and I want to sell some of them, what I'm typically going to do is host a BWIC, which stands for bids wanted in comp, or bids wanted in competition. And this is a process where I blast email 30 broker dealers that make markets in CLOs, and I said, hey, in 2 days, I'm going to hold this auction. You're going to send me emails. I don't want any other type of communication. So you got 30 desks. They're aware of this. They blast this out to their clients. They tell their friends. So all these people know that you're hosting this auction for 10, 15 million bucks worth of securities. The day of the auction, it's a 2-hour auction. You are going to get emails, Bloombergs, phone calls, homing pigeons, anything with people sending you prices. They're sending you levels in all these different ways, and the ways that you didn't say you wanted. So what do you have to do? Well, it would take 2 investment professionals who are decently highly paid people, 3-4 hours to manage this process, collect the bids in spreadsheets. And because you don't want there to be errors, right? God forbid, I get a level from JP Morgan and a level from Wells, and I don't write those levels down correctly. You could pose a huge risk to your portfolio into that whole process. So a couple of our clients said, hey, you guys are doing this interesting thing, working on improving refis in the secondary market. Could you try to approach this? There have been a few attempts at it. Nobody's done all that well. What do you say? So we created this platform. Again, we got regulatory approval to basically try to automate a lot of those pieces of this BWIC process. And so we built a platform. We launched it a little over a year ago. A lot of success. We've seen a ton of institutional investors and broker-dealers actually join. We also have 15 broker-dealers on that platform as well. And what we found is that it cuts the time that you're conducting a trade in half. And that's from most of our clients say it cuts it about in half. We're also adding some additional automation tools. The common process when you're receiving bids on one of those BWICs is to give feedback. Goldman Sachs gave me a level. Thank you, Goldman Sachs. I appreciate it. You're not in the top 3, but please improve your bid. What we did is, that's ridiculous that I would have to type that into a Bloomberg chat or an email or something. And again, this is 30 different parties you're dealing with. That's a mess. It's an absolute mess. And so we built these automation tools. We launched this platform during COVID, and we knew people were working in New York, California, London. We had a couple people in other parts of the world. And so we built a platform that's completely web-based, no software to download or anything like that. Because we work with all these banks, we've had a ton of diligence done by banks on us. So we had a lot of documentation to show people that this is a legitimate platform. So the interesting thing to me is, while we're talking about decentralized finance for some of these things, we're still waiting for a really good centralized platform in some of these markets to exist where transactions can happen that improve liquidity, that have low transaction costs, and are somewhat transparent, right? We keep private information private, but some information you want to be public. Now, the great thing about this is that in addition to saving people a lot of time and improving the process and keeping it nice and cheap, is this unlocks a ton of new data that, again, just like that AMR platform I mentioned, investors never had access to before. They would say, oh, I ran one of these BWICs last week and I got levels from this bank and this bank and this bank, but I can't find that spreadsheet, and I sent my trade confirmation on this email. So again, it's a mess. You can't really do any post-trade analytics. So instead on the platform, we built all of that information in there. You want to see how well you've seen, how well the bids have been from Credit Suisse, from Wells, from whoever in the last 2-3 months. You have all of that information built in. So you basically have your own personal league table for secondary trading built into the platform. So we think that's a big advancement because, again, it's unlocking a lot of data. It's giving people a centralized place to transact, and ultimately it's improving liquidity. So we hope we're going to keep on improving that platform. We also just launched one, so that's on obviously the secondary trading side. We actually just launched another platform that marries the secondary data with primary data called Issuance Monitor. So again, if I'm a CLO investor and I'm getting runs from dealers, 20, 30 dealers saying, hey, here's a new issue, here's a reset, here's a refi, here's a BWIC, instead of trying to manage this inbox apocalypse, it's all in one place, right? Organized, filtered, automated to use. So we're going to keep on coming out with a lot of those sort of client-driven initiatives to improve the processes. But ultimately, at the end of the day, what this is doing is helping make the market better and welcoming more investors to it. So we're excited about that.
And could you guys roll back the slides, one slide? So there's one slide with our email addresses on it. There you go. So you can get James's slides. Unfortunately, they weren't included.
Yeah, give me a shout.
But you can reach out to us if you have any questions. We're out of time, so I'll kind of leave it at that. Please reach out if you have any questions, and I think some of us will be around after the session. Thanks.
Thank you.
Thanks, guys. You're great.
Nice job. Shake it.
I'm interested in your.
Let me cheat in.
Yeah, go.
I'm sure.
Yeah. Take care. Good luck. Got everything here.
Were you TCC and ATS? Were you a part of that? Or is that somebody else?
Oh, it was on me.
This is a laser pointer, not a slide.
Yeah.
I was like, what am I supposed to do with this?
Oh, indeed.
That's rather. It was bad. It was